All right, Jim. So how do you invest as a self-made millionaire? Like what process have you done to get to where you are and to have yourself and your foundation set up for retirement and for the rest of your life at the early age of 40 years old? I look at what's worked for me and I go back through over the last 17 plus years of being a professional and having a job and how I've grown these three multi-million-dollar companies and now working on the fourth. When I look into what I did, the first step when it came to maximizing my net worth was actually investing in myself. If I had extra money and it was put $10,000 into some stocks or put $10,000 into some education that can learn me some skills that then would make me more money, or investing it into my business that could go out and spend some money on marketing to go out and generate me some opportunities that we can then convert into income. The first stage in my 20s, that what was happening is I was very heavy and first investing in myself and my brain, and then also in my business. So then when I think about it, okay, well, like what was the next step that I really did? So then when I had excess money over that, for me, what worked was then I put it into real estate, okay? And the reason why I love real estate so much is that it allows you to have actual diversification from the stock market. If the stock market's doing something funky, going up, down, or sideways, it doesn't really matter if I have a tenant in there and I have money coming in. Like I don't have to sell that asset at that point. It doesn't even really matter what the valuation of the house is at that point. If my exit strategy is I'm gonna hold on to this asset for 10, 20, 30 years, right? At some point the value is going to be there. And meanwhile, I'm just having somebody else pay down the mortgage and somebody else build my long-term wealth. So then the other thing that I love about real estate is the long-term passive income. When you own real estate long enough, when you get into your 60s and 70s, being able to convert that and have all those loans paid down, it creates an environment where your passive income can easily be the same, double, triple, 4 times what you're used to making on a monthly basis. And as I've said before, and I'll continue to say, retirement's not a nest egg problem. It's not about the how many millions of dollars you have in the bank at the end of the day. It's a cash flow problem. It's about the money coming in on a monthly basis. And once you have your money making you more money than you can spend in a month, at that point you can work if you want to continue to work, or you can go kick your heels up on the beach if you want to as well. Because at that point you've replaced your job, right? So the first step was myself, what worked for me. And then the second step was real estate. And then once I had this foundation set up, what I've been doing is also put in a little bit of money in traditional stock markets. And then there's other private equity deals as well. Put some money into a business that's a pharmaceutical business that has a lot of upside. Could end up losing all the money, or could end up making a crazy amount of money if the drug that they're working on takes off, right? So what's nice about that though, is when I have that foundation set up of passive income, I can now invest from a place where I don't have to worry about retirement anymore. I don't have to be stressed out about that. I don't have to be worried about college when when I have 4 kids, when my 8-year-old gets to be college, like I can just sell a rental property if I want to. I don't have to worry about that. It's kind of like a forced savings account too at the end of the day if you think about it. So then since I have that foundation in place, I'm now able to take some excess money and put that into opportunities that could potentially yield me a really high return. And if they don't, it really doesn't matter. It doesn't impact the retirement that I'm going to end up having. So when I think through also, as far as the criteria of investments, and if I'm going to invest, the criteria that I use to make judgment calls on what I should invest in, the interesting part about me is that the pharmacy that I just mentioned is a private equity. And private equities, there's a lot of investment bankers out there. They use a lot. They have a whole, it's like as if it's in Spanish. They have all these different words like waterfalls and general partners, limited partners. There's all of these different terms out there. And as we were I was studying these structures and really trying to go through them. And we have our own structure that we did and that we set up for people that know us, that we're in a relationship with. And anyway, I got really overwhelmed by it because I was like, okay, I see that the world's shifting to these private equity deals. This market keeps doubling and doubling. And I understand that the people that make the most amount of money are the people that invest in something before everyone else knows about it. That's really where the crazy high returns are. But there's all these terms out there that I haven't even heard of. And it took me about 6 months thinking through it. Then I had a light bulb moment. I had an epiphany. I'm like, wait a second. I've been a professional investor for over 15 years. My business partner and I have made buy-sell decisions on thousands of properties now at this point. And I know business. I know how to make solid investment choices. What I don't know and I don't understand are all these different words these investment bankers are using. Once I flipped the script on that and then I realized, wait, there's a lot more common sense to this. There's a lot more just like acumen to this that you can use. It really helped me. So when I'm looking at things, the first thing that I want to make sure that I know is what is a true look at my understanding of the investment? Okay. Do I understand this type of business, this type of niche? And do I really understand what the risks are and what some of the assumptions are in the business model? And so I want to be honest with myself and really gauge what that level of understanding is, okay? And the second thing I really want to look at is the people behind what the investment opportunity is. Do they have a track record of success? Are they experienced? Have they done something else successfully? Or are they brand new and this would be kind of the first thing? And I don't necessarily, as far as experience goes, when it comes to the private equity space, especially if you're just getting into it as an investor, a lot of times the most experienced people aren't necessarily going to be the biggest returns in this space because those best deals, they already have a Rolodex of investors that have made a lot of money with them over the years. So their best deals, most of the time, are going to go with people that they already know, that they'll just throw more money into it with them, right? So obviously, if you can get in with somebody like that, that's an incredible opportunity. A lot of times, the more seasoned people that are fund managers, these general partners, will actually hold on to much better terms than what someone with less experience might be willing to give you as an investor. So for every company that's out there, think about investing into Mark Zuckerberg right now, on the open market versus investing in Mark Zuckerberg when he was a 20-year-old, right? There's a completely different risk profile out there. So in an ideal world, you have a Mark Zuckerberg that's, a little bit of season, maybe, more like 25, 30, and just hasn't quite hit it big yet. And you can see it, you see the opportunity, you see that the person's ready, and you can kind of jump in at that right perfect time. So it's not, so experience isn't the only thing to necessarily consider on that, okay? So the next thing is really the understanding of the business strategy and if there's any competitive advantages that they have. Do I understand it? Do I think how it fits in the marketplace is going to be a better mousetrap? It's going to be something that can really take off. So as far as the criteria goes, these are all just solid, basic business things, right? I haven't gotten into the financials yet. And the financials really, I don't have an investment banking background. I've had to, as I was studying this, I had to start really Googling and trying to understand internal rate of return versus AAR versus, all of these different dynamics. What's interesting is that when you're looking at investment opportunities, and this is what I do, okay? So you're gonna have to figure it out on your own as well, but this is what has worked for me. The pro forma, I do look at it, I do wanna see it, but it's fourth on the list. It's not quite as big of a priority because pretty much everyone's pro forma is going to say good things. Everyone's pro forma is going to look good. So really the people behind it, the strategy and how it fits in the marketplace, and my understanding of the risks, I weigh a lot more heavily than what the ultimate pro forma is going to end up being.